Hey guys, we are back today, and today we are looking at a store that is one of my favorites to go to. I think a lot of people would agree when you're in there, it's something special. One thing about it is just every time you're in there, I feel like I'm always appreciating how good of a business it is. From the free samples, the prices are always great. Just the way they lay out their stores, the different products they have from season to season, really just appreciating it every time I go in there. So, yes, today is Costco. We're going to go ahead and take a look.
Alrighty, so getting started, we're going to type in Costco 10K into Google, pull up their 10K information on their website, and then we're going to pull the years that we're looking for. So for going back 5 years, we're going to have 2020, 21, 22, 23, and 24. So we have those pulled up, and let's get into our spreadsheet. As always here, we're going to start with the income statement and we're going to set up our spreadsheet the same way Costco has done theirs. So for revenue, we have net sales and membership fees. For operating expenses, they've done merchandise costs, SG&A, and pre-opening expenses. That's only for the past years dating back to 2021, I believe. And so we're just going to do those as long as they're counting them on their income statement, but we don't have to. That's basically why we're going to have a total at the bottom so that it'll calculate everything, but you'll see what that looks like. And then of course, with the different taxes and income taxes, they've done interest expense, interest income, provision for income taxes, and then two kind of weird things here: net income including non-controlling interests, and then net income attributable to non-controlling interests. So kind of a weird layout, but that's how we've set ours up so that we can arrive at the same numbers. So first, I'm just going to walk through the income statement for the different years. So we have 2020 and 2021 on this tab, but then I'll just populate the tabs just to save a bit of time here. So I think the only thing to point out is pretty simple, just kind of copying and pasting these numbers into our spreadsheet. But like I mentioned, the pre-opening expenses are just something dating back to 2021. So I believe if we come to 2022, yeah, that's no longer something under operating expenses. So that's just something that I'll show you what that looks like. But as we populate this page here, I'll go ahead and click these to get the numbers. Just a macro that I've done on a different page. So you can see here what this looks like. These are just going to be blank, but the sum will still come here at the bottom. So it all works out in the end. Operating income and net income. One thing I will point out is I feel like it's just a little bit strange here that these total revenues are really jumping up in our expected kind of projections moving forward, even up to 2025. And of course, that's coming from this number down here, which is our total revenue. And when we get those projected revenues, that's just coming from the percent as a expense as a percent of sales, which we'll see here really comes down to our total operating expenses being pretty close to the total revenues, as you can see there. So those kind of, obviously not the same number, but pretty close, which is different from some of the other companies we've looked at, just having a high percentage of expenses. So that's why we're going to get some of those projections looking higher. I think I've mentioned in the past that, starting to dive into this and don't have quite as much experience. So if there is a better way to look at this, I'm happy to hear and adjust my projections moving forward. Just something I wanted to point out. It is growing quite fast. Overall, though, nothing too out of the ordinary. Just like our revenues are growing quite a bit, so are the expenses, and a lot of that is coming from merchandising costs. So I imagine if you've been in a Costco, you can see a lot of new items or different items from season to season. Not sure if this is exactly going to grow at this rate, but that is probably one of the things that separates Costco from other players in the space is the items that they're able to offer. So I can see that definitely increasing over time. But everything else looks pretty straightforward. Net income doesn't seem to be jumping up as drastically as the operating expenses or the revenue. So hopefully that will give us a good projection there. But we can get into the earnings per share as well as the shares outstanding. Okay, so I did make a little change on the earnings per share. Just had to multiply it by add a couple zeros. The magnitudes were a little off. So hopefully those projections look a little more in line with the previous years. Overall though, tax rate as well as shares outstanding, holding pretty steady over the last 5 years or so. And according to this model, same thing moving into the future years. I think one of the things that stands out with Costco is just their expenses as a percentage of sales, especially their merchandising costs, just very high, and that will probably play a big part in the projections on the next page with the discounted cash flow analysis. And moving into the last part here to calculate the changes in working capital, we will populate this one. Ooh, there we go. Pretty satisfying. Okay, so moving on, we see the changes in working capital pretty different from year to year here. So we have some negatives, some big negatives, positives, just fluctuating back and forth. So we can go on to the next page and see what it looks like. So there are some things I'm just a little not sure about. So first thing we'll look at is our revenue. The percentage growth is pretty huge over the next 3 years or so based on the numbers we were putting in on the previous tab just with the revenue. So that's something I'm not too sure about, but I am projecting out 11% growth over the next 10 years. So that'll be our terminal free cash flow growth rate. With those growing numbers, just seems to be something that Costco over the past couple of years, and just based on some of the research I've done indicating where it could be headed, seems pretty realistic. The only thing is that first 3 years into this model, not too sure about that. So if there is some advice, happy to make some revisions and see how those numbers turn out. Otherwise, a lot of the other numbers on this page look pretty standard, track pretty well. A lot of the growths make a lot of sense, nothing too out of the ordinary. But one thing I did notice is the free cash flows will be negative for all of these years into the future. So I believe a lot of that just comes from the changes in working capital and starting with that net income. So just with the changes or subtracting the capital expenditures, I should say, I guess it could make sense just with Costco's, a big part of their business being those large buildings that they have to purchase, and probably warehouses to store a lot of the items that they're purchasing. Just being a lot of that inventory could make sense. I would just be concerned about all of this negative free cash flow. But as long as our model is giving us some numbers that make sense, I guess it wouldn't be too much cause for concern. But just one thing that popped out to me. Alrighty, and as we wrap this up here, we can take a look, like I mentioned, negative net present value of these free cash flows here. You'll see the net present value of the terminal value based on the rates that we picked here. I did forget to mention the discount rate and why we chose it, but again, just based off some of the research I did for Costco specifically, 8% seemed to be a pretty widely agreed upon consensus, so that's what I went with there. So we're basically just going to pull up the debt, the cash, and type in these numbers. So coming to 2024, the last full year that we have, we will type in the total debt here, which is 69831, and then total cash being 9906. Shares outstanding, that is something we're going to want to Google here really quick once this loads. So we can use this number here, and of course making sure it's in the right kind of magnitude here. And finally, the current share price, Costco stock price, Typing that in here, and that will give us 985.84, which means Costco is a bit undervalued. There's an implied equity placing it around $1,040 with a 5% upside, meaning might be a good idea to buy Costco.
Amazing. How awesome is it when a company you like shopping at is doing well, numbers are looking good, and giving good buying signals? Thanks for watching, and go get those free samples.